On October 24, 1929, the day that would enter the history books as Black Thursday, the New York Stock Exchange collapsed. In a single week, the American economy lost approximately $30 billion. That day, while millions of investors were ruined, one single man made $100 million betting against the market. His name was Jesse Livermore. He was considered by his contemporaries the most brilliant speculator in the history of Wall Street. 11 years later, in November 1940, Jesse Livermore's body was found in the cloakroom of the Sherry Netherland Hotel in New York. Next to him, a handwritten note to his wife. The death certificate declared the cause suicide. The man who had predicted with precision the greatest crashes of the century could not foresee his own fall. This is the documented story of a speculator who read the market with unmatched mastery while remaining completely blind to himself. Jesse Lauriston Livermore was born on July 26, 1877, in Shrewsbury, Massachusetts. His family were poor farmers. According to his official biography, his father wanted Jesse to work the land. But Jesse, at 14 years old, had other plans. According to historical records, Jesse left the family farm with $5 in his pocket given to him by his mother. He took a train to Boston. There, according to his own words recorded in the autobiography dictated to Edwin Lefebvre, he found his first job at a brokerage office called Payne Weber. His initial job was writing stock prices on a chalkboard as they came in by telegraph ticker for $2.50 a week. But according to his own statements, what he was really doing was studying. While writing numbers on the chalkboard, Jesse began to notice something no one else was seeing: patterns, repetitive behaviors in prices. Biographers document that by age 15, Jesse had developed a personal system for predicting where stocks would move. At 15, Jesse made his first bet. According to records, it involved Burlington Railroad shares. He bet $5 with a friend. He won $3.12. It was the first documented gain of his career. $3.12. A small sum. But according to Livermore's own words decades later, that moment changed everything. For the first time in his life, he felt what he would describe as the absolute certainty of having read the future. At 16, Jesse had accumulated $1,000 operating in what were known as bucket shops. Bucket shops were legal gambling houses on stock prices, but without actual transactions being made in the exchange. It was pure speculation. For the operators of bucket shops, Jesse soon became a problem. His record was extraordinary. According to testimonies recorded by his biographers, he won more than 80% of his bets. The owners of bucket shops began banning him from entering. They gave him a nickname that would follow him all his life: the Boy Plunger. By age 20, according to records, Jesse Livermore had been banned from virtually every bucket shop in Boston. With no more bucket shops willing to take his bets, Jesse made the decision that would define the rest of his life. In 1900, at 23 years old, he took a train to New York with $10,000 in his pocket. His destination, Wall Street. But Wall Street wasn't a bucket shop. Real transactions took time to execute. Prices changed between the moment of the order and the moment of the trade. The strategies that had worked in Boston didn't work here. In less than 6 months, according to financial records, Jesse Livermore had lost all his capital, the $10,000. He had to return to a small secret bucket shop in St. Louis to rebuild from scratch. But Jesse was a relentless student of his own mistakes. According to the words he himself would record years later, every loss is a lesson the market charges you. In St. Louis, he rebuilt $5,000 in a few months. Then he returned to New York, this time prepared. By 1907, at 30 years old, Jesse Livermore had developed an almost supernatural intuition about market behavior. His contemporaries on Wall Street began to notice something. When Jesse went short, it was advisable to follow his move. In October 1907, the United States entered what economic historians would call the Panic of 1907, a severe banking crisis that almost collapsed the entire financial system. While millions of investors lost everything, Jesse Livermore, according to NYSE records, made $3 million. $3 million in 1907, equivalent to approximately $100 million in current value, adjusted for inflation. At 30 years old, Jesse Livermore was officially a millionaire. According to New York Times reports of the era, the most powerful financier in the United States, J.P. Morgan, sent a personal message to Jesse Livermore. He asked him, in the name of the government and financial stability, to stop selling short. Jesse, according to the same reports, agreed. After the Panic of 1907, Jesse Livermore became a legendary figure on Wall Street. But something curious happened afterward. According to records, in the following 6 years, Livermore lost his entire fortune. Again. This would be the first instance of a pattern that would repeat throughout his life. Enormous fortunes followed by absolute bankruptcies. His biographers document that by 1915, Jesse Livermore had declared personal bankruptcy, but Jesse didn't give up. According to NYSE records, by 1917, he had rebuilt $5 million. His wife, Dorothy, in an interview cited by his biographers, described that period. Jesse couldn't simply live with money. He had to be chasing more. This observation by his wife coincides with what modern psychologists would identify in similar patterns. But in the 1910s and 1920s, there was no vocabulary to describe it. Jesse was simply a man passionate about the market. In the 1920s, while the United States lived through the era of greatest prosperity in its history, Jesse Livermore reached a new level of fame. His daily routine, according to his biographers, was almost religious. He woke up at 6 in the morning, studied the closing prices from the previous night, arrived at the Heckscher Building on 5th Avenue and 57th Street before the market opening, and there, in a private office equipped with 6 ticker tapes and a team of 6 analysts, he operated throughout the day. According to his staff records, Jesse Livermore had an absolute rule: complete silence in the office during market hours. His analysts passed him information without speaking, only with written notes. Concentration was sacred. In the evenings after the market closed, Jesse went to his 200-foot yacht, the Athero II, or traveled on his private train between New York and Florida. He had mansions in Great Neck, Palm Beach, and Lake Placid. But there's something notable in the testimonies of those who knew him in that period. His wife, Dorothy, in private letters preserved in historical archives, wrote, "Jesse lives in a solitude only he knows. Even when we're together, he is elsewhere." In 1929, Jesse Livermore was 52 years old. He was one of the richest people in the United States. His fortune, according to Forbes' estimates of the era, was close to $20 million. And then, he saw something almost no one else saw. According to his own operation records and subsequent analyses by economic historians, Jesse Livermore began building a massive short position in September 1929. He was betting that the market, at its apparently unstoppable peak, was going to collapse. His colleagues thought he had gone mad. The market had risen without interruption for years. Bank of America, U.S. Steel, Radio Corporation of America. All stocks were at historic highs. Public predictions spoke of a new era of permanent prosperity. But Jesse Livermore had studied the patterns for decades. The records of his personal notes show what he was seeing. The volume of transactions was increasing while prices were rising ever more slowly. It was the classic signal of an exhausted market. On October 22, 1929, 2 days before Black Thursday, Jesse Livermore had built the largest short position of his career. According to subsequent estimates, equivalent to about $400 million in current value. On October 24, 1929, the market collapsed. On October 28, Black Monday, it lost 13% in a single day. On October 29th, Black Tuesday, it lost another 12%. The nightmare had begun. When the disaster consummated, Jesse Livermore had made, according to official records, $100 million, an unimaginable sum. The modern equivalent, approximately $1.8 billion adjusted for inflation. New York Times reports from November 1929 documented that Jesse Livermore had officially become one of the 5 richest people in the United States. At the worst moment of the American economy, Jesse Livermore was at the peak of his career. The name Jesse Livermore appeared in every newspaper, in every financial magazine. Reporters chased him. New investors studied his methods. He was the Great Bear, the man who had mastered the greatest collapse in history. But behind the public fame, according to his wife, Dorothy's letters, and his biographer's observations, something had begun to change inside Jesse Livermore. The perfect prediction had not brought him peace. It had brought him something different. The perfect prediction had brought him the most dangerous question for a speculator. What do I do now? By 1930, Jesse Livermore had achieved everything he had dreamed of as a child. Mansions in 3 cities, yachts, private trains. His name was synonymous with speculative success. But there's something strange documented in his financial records of that period. According to NYSE records, Jesse Livermore continued operating with the same intensity after 1929. More intensity, in fact. He increased the size of his positions, took more risks, operated in markets he didn't know as well: cotton, wheat, coffee. His biographers observe something important about this period. The perfect predictions of the 1929 crash was not for Jesse Livermore a culmination. It was just one of many, and the market, according to his own words, was the only place where he felt alive. This confession, documented in multiple sources, is the key to understanding the rest of the story. For Jesse Livermore, money was not the goal. Money was the inevitable byproduct of his true desire, risk itself. The consequences began manifesting rapidly. According to records in 1931, 2 years after the crash, Jesse Livermore had already lost approximately half of the $100 million he had made. By 1932, he had lost 3/4. But unlike previous bankruptcies, this time something was different. People close to Jesse Livermore began to notice it. His wife Dorothy wrote in a letter to a friend, "Jesse has lost fortunes before, but this time it's different. This time it seems he has lost something else as well." Jesse and Dorothy's marriage had been deteriorating for years, according to subsequent divorce court records. In 1932, Amid the financial loss and Jesse's documented mental deterioration, Dorothy filed for divorce. The divorce agreement, according to public records, included monthly pensions for Dorothy and their 2 children, Jesse Jr., who would have his own tragic story, and Paul. Jesse Livermore remained in his apartment at the Sherry Netherland Hotel. In 1933, according to documented financial records, Jesse Livermore declared personal bankruptcy for the 2nd time. It was the 5th major financial fall of his career, but according to observations of those who knew him, it was the first one he seemed unable to reverse. During the following years, according to notes from his 2nd marriage to actress Harriet Metz Noble, Jesse Livermore continued operating in the markets, but without the spark that had characterized him. According to an interview he gave in 1939 to a Saturday Evening Post journalist, "The market still speaks to me, but I no longer hear like before." In March 1940, Jesse Livermore made a decision that surprised his contemporaries. He published a book titled How to Trade in Stocks: The Livermore Formula for Combining Time Element and Price. The book was the summary of 4 decades of observations, the rules, the patterns, the principles for reading the market, everything Jesse Livermore had learned about the discipline of the successful speculator. But there's something notable about the book, observed by his biographers. Jesse Livermore taught others how to do what he himself could no longer do. The rules he prescribed for success were the same ones he had been violating for years. The rules the book established included: never trade against the main market trend, cut your losses quickly, do not add to losing positions. His own trading records from the last years, now studied by financial historians, show that Livermore had systematically violated each of these rules. The book sold well, but not exceptionally. According to publishing records of the era, it sold approximately 5,000 copies in its first months. For a financial manual from a legendary author, it was a modest result. But the real importance of the book wasn't in its sales. It was in what the book represented as an act. It was, according to the observations of later biographers, a deliberate act of leaving a legacy, an intellectual inheritance. During the months that followed publication, according to the testimonies of his 2nd wife, Harriet, Jesse Livermore became increasingly withdrawn. He spent hours alone in his library, spoke little. The conversations they had seemed distant. His financial operations also changed. According to records documented by his brokers in the last 6 months of 1940, Jesse Livermore almost stopped operating. The man who had built his identity around the feverish activity of the market was now still. His later biographers documented several episodes of clinical depression throughout his life. But there's something important about the final months. For the first time, testimonies suggest that Jesse Livermore had lost the ability to imagine himself in the future. One of the most moving observations comes from his personal lawyer, according to letters preserved in archives. In a conversation in October 1940, Jesse Livermore told him, "I have known how to read the market for 40 years, but I haven't been able to read myself for months." This confession, recorded by his biographers as one of the most defining statements of his life, captures the central paradox. The master speculator, who had dedicated his life to deciphering invisible patterns, could not decipher the closest pattern of all. On November 28, 1940, Jesse Livermore had what would be his last public dinner. He dined with Harriet at the restaurant of the Sherry Netherland Hotel. According to testimonies of waiters recorded by later biographers, Jesse seemed calm, almost serene. After dinner, according to the hotel's security register, Jesse and Harriet went up to the apartment. They had a brief conversation. Jesse told her, according to the testimony Harriet would later give to the press, "I'm going down for a moment." It was 7:25 in the evening. Jesse Livermore went down to the hotel lobby. Then, according to records, he entered the cloakroom that was reserved for restaurant guests. He closed the door behind him. Approximately 40 minutes later, hotel staff found Jesse Livermore. Next to him, a handwritten note for Harriet. The official death certificate, filed in the New York State records, declared the cause suicide. He was 63 years old. The content of the note would be known later. According to Harriet's public testimony to the press, recorded by New York Times reports of November 29, 1940, the note said, "My dear Nina, I can't take it anymore. Things have gotten worse. I am tired of fighting. My life has been a failure. My life has been a failure." Those words were written by one of the most successful speculators in the history of Wall Street, by the man who had predicted with precision the crashes of 1907 and 1929, by someone whose name still appears today in financial manuals. Jesse Livermore's funeral was held 3 days later. There attended, according to reports, several prominent members of Wall Street: his wife Harriet, his ex-wife Dorothy, and his 2 sons. The service was, according to testimonies, brief and dignified. But Jesse Livermore's story doesn't end with his death. It ends with something strange: the transformation of his name into myth. After his passing, according to publishing sales records, his book, How to Trade in Stocks, began to sell more. The book, Reminiscences of a Stock Operator, published in 1923, and based on Livermore's memoirs narrated to Edwin Lefebvre, also began to sell more. Today, according to financial rankings, both books are among the most recommended to new traders in the world. Dozens of legendary modern traders have cited Jesse Livermore as their main influence: Paul Tudor Jones, Jim Rogers, Stanley Druckenmiller. All have mentioned in documented interviews that Livermore's rules shaped their operational philosophy. And here is the paradox, documented in dozens of subsequent biographies. The man who wrote the most cited rules in the history of trading could not apply them to himself. The rules worked for everyone who followed them afterward, except for the man who wrote them. Financial historians and psychologists who have studied Jesse Livermore's case have proposed various explanations. Some speak of risk addiction, others of untreated clinical depression, others of inability to adapt to the markets of the 1930s. All explanations are partially true. But the most disturbing observation, and the most relevant to understanding his case, came from his own biographers. Jesse Livermore's ability to read the market depended on something specific: emotional distance. He saw the patterns because he was not inside them. That same distance that gave him clarity to see the world took away his ability to see himself. To read himself, he would have needed the same kind of external observation, and that, according to observations, is something a master speculator cannot give himself. The lesson that Jesse Livermore's case has left in financial and psychological literature has 3 parts. First, according to biographers, external mastery does not imply self-knowledge. The human brain that can read complex systems of the external world may be simultaneously blind to the most basic internal systems. Second, according to financial historians, rules work only when they are applied. Jesse Livermore wrote the most perfect rules of trading. The rules were correct. The problem was not in the rules, it was in the inability to follow them when he himself was the operator. Third, and most profound, according to psychologists who have studied the case, money does not fill the void produced by the absence of purpose. Jesse Livermore accumulated more money than he could spend several times in his life, and every time he had to destroy it and rebuild it. Because for Jesse Livermore, according to documented observations, money had never been the goal. It was the byproduct of the only thing that made him feel alive, the risk of losing it all again. Jesse Livermore's case raises a philosophical question that no financial manual can answer. What is success when success is measured in money, but money does not produce peace? This question, open and unanswered, is what Jesse Livermore left as his true legacy. Not just the financial rules he wrote, but the warning that his own life represents. Because in the end, Jesse Livermore's story is not about fortunes lost. It is about something much more profound. The human mind can master the most complex systems of the external world while remaining an impenetrable mystery to itself. And sometimes the greatest success does not protect from the greatest failure. Sometimes it produces it. This is the documented lesson Jesse Livermore left to the world. Not with the rules he wrote, but with the life he lived, and with the note he left at the end. If you choose to witness their stories, subscribe to Rise and Ruin. Next, we follow another empire from glory to dust.